Thank you, Mr. President. On Tuesday of this week, I regained my previous held seat on the Senate Banking Committee, a committee I served on from 2011 until the beginning of this Congress. While this committee sometimes goes under the radar for many Americans, the oversight it conducts and the issues it considers under its substantial jurisdiction is of great consequence to America and to the American people. The owners and employees of institutions have experienced success when their communities experience success. What I'm saying here is that how we lend money matters to every people, to every kind of person, every day. And so what we have in Cross Kansas in many instances is a difficulty in just really hard times. What I want to talk about is community. These community financial institutions are of great importance to the folks that I represent in Kansas. And what I want to do in part with my opportunity to serve on the Banking Committee is to make sure that those financial institutions have the regulatory environment in which they can benefit their communities and benefit the citizens who live there. Communities in Kansas are losing their hometown banks to consolidation and sales. And some of these banks that are moving in that direction have been family-owned for generations. In order to better understand why these lenders were consolidating or selling, I sought out the nature of this decline by speaking with the financial leaders from across the country. The overwhelming response I received is that the costs associated with complying with new federal regulations are simply too much to absorb in their business model. In the aftermath of our country's significant financial downturn, a new regulatory framework was put in place to rein in those bad actors and punish bad behavior that led us down that path in 2007 and 2008. While we've had more than 7 years to determine what effects are of this new regulatory environment, Dodd-Frank, what has it meant to our community banks, our community financial institutions? The most glaring aspect of these new regulations is the disproportionate burden placed upon those smaller institutions seeking to comply with these new responsibilities. Rather than extending credit to best fit the needs of their customers, banks are exiting entire lines of business because the penalties for making a mistake far outweigh the economic benefits derived from extending a loan. I experienced this damaging news in reality during the Senate Banking Committee's consideration of legislation to reform the secondary mortgage markets in 2014. I was attempting to solicit feedback from Kansas lenders on the potential impact of some of these proposed changes would have on their communities, and what I learned, unfortunately, was this response: Jerry, we don't make home loans anymore. When pressed for a reason, they responded that it just didn't make business sense for them to do that any longer due to the increased federal regulators' crackdown on mortgage lending. As a member of the Senate who cares deeply about rural America and the special way of life we enjoy in Kansas, this is a very damaging occurrence. If a community banker can no longer extend credit to what would have otherwise been a credit-worthy borrower, the fear of making a mistake, the repercussions of that follow, then they've decided not to make the loan at all, not even to be in the business line. What community would expect their financial institutions in their community to refuse to make a home loan? It's the American dream. While community banks have been consolidating for a number of years due to shifting demographics and market conditions, we cannot nor should we attempt to discount the role of post-Dodd-Frank regulatory environment has played in that acceleration that harms our community banking structure. I'm not opposed to regulations, and neither are the community bankers working to serve their communities, but there has got to be prioritization on the part of Congress to create an environment where local lenders can succeed, because the success of these institutions means the success of their communities and the people who live there. During the fall of 2015, I worked alongside a number of committee colleagues, both Republicans and Democrats, to see if we could bridge the divide and bring relief to our community lenders across the country. While these efforts did not then produce a result, these discussions demonstrated that the issues facing financial service world need not be partisan, and they sowed the seeds for what has now resulted in legislation moving its way through the legislative process today. I'm happy to support Senate Resolution 2155, the Economic Growth, Regulatory Relief, and Consumer Protection Act, recently reported out of the Banking Committee on a bipartisan vote. Many of the provisions in this bill originated in legislation I promoted since I came to the Senate, first as the Community's First CARE Act, and most recently as the CARE Relief Act. And while this legislation will not solve every issue that needs to be solved, it is a meaningful progress that will make a difference in Congress's responsibility to ensure that economic growth is not needlessly impeded. It is our duty to ensure that economic opportunities flourish and that Americans have success to the tools necessary to pursue the American dream. The Banking Committee can and will play an important role in providing these tools, and I feel fortunate to have the opportunity to lend the voice of Kansans to that effort. I look forward to working with Chairman Mike Crapo, the senator from Idaho, and the ranking member Sherrod Brown, Senator Brown from Ohio, and we'll work together to make sure that good things happen in Kansas and across the country. Again, I look forward to working with my colleagues in the Banking Committee and on the Senate floor to see that all Americans have the opportunity to have access to credit so that we can continue to pursue a growing economic opportunity for all Americans, and the American dream is alive and well. Mr. President, I notice the absence of a quorum.